Hey everybody, this is Jose Blasco. We are about to start in 20 seconds. Could you please use these 20 seconds just as a sound check and give me a quick confirmation on the chat box so I know you hear my voice and we are ready to go. Thank you so much. Very nice. That's wonderful. Very, very nice. Thank you so much, everybody. So we just got to the top of the hour. Okay, so I'm just closing everything here so we can maximize our introduction slide and have a proper official start of the session. How are you, Ruben? Good to see you. Mark, how are you? Um, Praghavara, how are you? Wonderful. Very nice to have you all in the session today. So let's begin. Welcome to the session, everyone. My name is Jose Blasco. I will be your guide in today's session. Today is December 19, 2019. We're getting very close to the end of the year, isn't it? So let's spend some time together to do some trading. Market will open in 30 minutes from now. I guess it'll be a good time to identify opportunities for longer term, which is the subject for today. And we'll plan for those trades. Keep in mind, some will be directional opportunities, some will be non-directional opportunities, and we'll be identifying these opportunities, planning for them, making sure rules are met, and then be ready to execute as the market opens, as I said, in a little less than 30 minutes now. Before we start, a quick disclaimer. So I'll read it for you. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive when using our products. And this is the end of the introduction. So we are now entering our beautiful TradeStation platform, ready to identify the opportunities and to execute them. Okay, that's the plan. So anyway, so let's begin. As always, looking at the left side of our screen, we have the scanner, multiple results here, but the ones we're going to care the most in the beginning part of the session will be to look at the directional opportunities to either go long or short. So long opportunities, short opportunities, directionally speaking, but then also we'll be looking at the non-directional trade. ND for non-directional, those are pure non-directional trade, where we're going to expect those markets to remain trading horizontally, and therefore we're going to be selling options, collecting credit, and letting time pass in order to produce a profit for us. Of course, that's not always possible. Some market conditions are not so prone to have those stocks to trade sideways. That's what we call neutral long and neutral short, where there is not a clear price movement or price direction, but there is a little bit of a bias either to the upside or to the downside, and we can also work with credit strategies in that case. Normally, when we do credit strategies for neutral trades, we end up using credit spreads as an option strategy, which is certainly a very interesting strategy, but also we get paid half of what we normally get paid when we do an Iron Condor, which is when we do when a stock is likely to remain trading in a horizontal range. Because an Iron Condor, basically, it's you can think about it. There are many ways to describe it, but one simplistic way to think about it is two credit spreads together at the same time, and therefore you get, let's call it, double the premium. It's not exactly like that either, but you got my point, isn't it? So in other words, we're going to be shooting for non-directional trades and also directional long and short. That's going to be our bread and butter. Those three particular areas on the scan results are going to be our bread and butter. If we didn't find any non-directional strategy, then we'll jump into neutral long, neutral short, but that's going to be our plan B. Plan A will be to find pure directional strategies. Because of what I said, we get paid more. Okay? Cool. Okay, so let's begin. What do we have? Well, when looking at non-directional strategies, the scan has reported 10 results that could be valid candidates for our trades. We always start looking at those particular trades, and we always start looking at the stocks of a higher price value. Okay, we always start with the stocks of a higher price value. And the reason why we do that is because when we sell options, which is what we do here, we're doing credits, we are collecting premium, and we know the price of the options, the premium, derives from the price of the asset, meaning that the higher the value for the asset, the more the premium you are likely going to collect. It's not exactly like that. We all know that there are many other factors that also impact the price of an option, but certainly the price of the underlying asset, in this case the stock, it's the key element, right? So one easy way to kind of save time when you go through these potential 10 opportunities is to begin looking at trades such as STZ or GLD, which GLD is an ETF, so we will pass on that one. But the reason why is because those are $100+ stocks. Okay, so we'll start with the higher price points first, and from there we'll move into other possible or potential opportunities with the other stocks in order to save ourselves a little bit of time. Because if not, we may end up, if you do that, if you do this application with $20-$40 stocks many times, basically you waste your time, because then you never get premium enough. Okay, so kind of sharing a little bit of the process with all of you. For sure, many of you are part of the sessions regularly, so you know all of these by heart. But for the ones of you that are part of those sessions since not so long ago, I want to phrase it so beyond today's session, you can replicate that by yourself, which is the goal in the end, right? That I help you to create your own processes with the right technology, etc., but in a way where you become independent. Okay, cool. So anyway, so let's begin with STZ, Constellation Brands. Okay, now, the first thought that comes to my mind, as you know, and I know some of you are thinking about it, is okay. So what about the earnings reports, right? Because the fact that STZ has high price options, in one hand, is certainly important and useful for us to know, but it may be because there is a reason behind it, which could be earnings, and that would be a problem because earnings are certainly a contradiction when it comes to expecting a stock to remain trading sideways. Normally earnings create gaps, isn't it?
No ha sido posible. Los partidos no han alcanzado un acuerdo y el próximo 10 de noviembre volvemos.
Second here, because I got some automatic ad playing on this website that was a little loud. Sorry for that. Anyway, so what do we have? STZ. So the next earnings for STZ is going to be January 8th. Okay, January 8th. If you were to look at the calendar, today is December 19, meaning that tomorrow is December 20 on Friday, and the next week is 27, and the next week is January 3. In other words, we can deal with 2 to 3 expiration dates to plan a trade on that stock. That feels good. Next one, then that would be Friday 10, and Friday 10 is after January 8, and therefore then January 10, which is Friday, would not be a valid expiration date. But January 3 or December 27, as I said, probably will be good candidates. So what do we do at that time? Well, without even thinking about it, we're just gonna launch Option Station Pro. Okay, so just launching it here. Just gonna open in a sec. Here we go. It's opening on my other computer screen. Let me bring it to you. Just one sec. Here we go. Option Station Pro. And what I'm gonna do here is to input STZ so we can begin all the planning as we get to understand the available options in here. Okay, so again, we got 20 December 27, January 3, and then January 10. So we're gonna start with December 27 because really December 20 is only one day from now. I'm not sure we're gonna get paid enough. Now, in the other hand, I am noticing, which is a normal thing, by the way, as the expression approaches, because we start getting what we call fake Greeks. We can see a great level of volatility, 30% instead of 16%. So this would suggest that maybe we got plenty of premium there. Again, I would be kind of shocked if that's going to be the case. Okay, but just to be mechanical, I'm going to start with December 20, and I'm going to right-click to analyze and sell an Iron Condor. Okay, Iron Condor. We got another one here that we had from another time, so I would like to get rid of that one. Let's see. Okay, one sec. Okay, let's do it again. So I'm just gonna go back into options, the options tab. Anywhere, I'm gonna right-click, analyze and sell, and Iron Condor. Now the Iron Condor shows up on my screen. We can see here clearly December 20. Okay, and then what we're gonna do in this beginning part of the process is to change the -5% to be +1 standard deviation and -1 standard deviation, and that sets a range going from 180 something to 187 something. That would be the expected range for price to travel between now until tomorrow at the end of the trading day, which is December 20. Okay, so anyway, so now that we know that 180 point something and 187 point something is where our concerns would be. Okay, what we need to do now is to just keep moving those lines to a place where we have at least two UFOs. And by the way, I didn't say it because I saw it and kind of it clicked automatically for me, but I didn't phrase it. So notice that we got 53% when it comes to probabilities here with the app. Certainly, that is a valid value. We always want to be above, ideally above 50% for non-directional. We accept 48% as well, but normally we want 50%. Okay, but before I get planning the trade here, I do need to double check what happens if I look at pre and post market. Okay, I didn't check that. So if I look at pre and post market, it becomes 48%, which that one it's not valid. Okay, so we're gonna stick to the regular session, providing those 53% reactions to the UFOs, which is nice. So cool. So let's continue. So we got 187 point something. That's where statistics suggest the price would go. We need to have at least two UFOs helping us to protect ourselves. So that means that the upper part of the range would be located around 190 point something. And on the bottom part, we need two UFOs below. This is one, and that would be two. Therefore, the bottom part of the range would be located around this price, which is 174.17. So that would be the range. Okay, so the question is, okay, so 190.65, do I get premium enough or I don't? That's the question. Okay. How much I said? 190.65. So that would be 190. And notice how the midpoint of 190 is 5 cents. And based on what we know from the rules that we have in the program, isn't it? That would not be a valid one, which is what I expected. That's why I was tempted to go straight into the 27th of December. But again, I wanted to demonstrate the whole process for you guys. Okay. So we're going to redo the process. You can see how that 30%, again, it's a mathematical calculation, but you start getting a lot of distortion on the Greeks the closer you get to expiration, okay? And therefore, that number really means little. The next expiration date is December 27, okay? And in this case, for us to find out more about December 27, we need to go back to the analysis tab and change the date to December 27. So the moment we do that, okay, we will now have new values recalculated, which is 179 and 188. Okay, so if I go back to TradeStation, 179 is certainly higher than 174, and 188 is certainly lower than 190. So the range stays the same, and therefore the question is still the same. If I was to use December 27 expiration, I would be interested in selling the 190s, and the question is how much I get paid for that. Okay, so let's take a look at the 190s, and the 190s are paying us 20 cents, which is not enough. Okay, which is not enough. So what do we do then? Well, we're gonna go for January 3, which is the last choice we have. January 3 would pay 52, which that one is good. Okay, but again, I'm not sure that would be a valid one. We will know this. Actually, I don't think it will be a valid one. We need to double check using the simulation here to look at the stats, and therefore changing date from December 27 to January 3, that will update the values that now become 177.69, 190.28. Those are the new calculated values. So 177.69 happens to be above 174. So you know what? I was not expecting this, but it's still valid for the bottom part. And for the top part, we got 190.28. And guess what? I was not expecting it, but actually 190.65 is also valid. Okay, so this condor does seem much more likely going to pay what we want it to pay. But let's double check. So 190, we got 52. Okay, the minimum we normally want to catch when we sell options is a minimum of 35 cents, isn't it? Let me bring the notes to the screen. So this would serve as a reminder for everybody. Okay, so let me scroll down until I find the right place on the notes. Here we go. Okay, notice how we are normally shooting for 35, even though at times we would be okay taking 25, but the minimum we normally want to acquire is 35 cents per option that we sell, both for the call side and the put side. So it has to be 35 and 35 minimum. So in this case, it's nice because we get 52. So it's a good beginning. 52 is certainly above 35. So that's a good beginning. So the next question is, okay, what if I sell the, what was it? It was the 174. Okay. So 174 will not exist. Okay. So it's going to be either 175 or the 172.5. Okay. So we're going to get to see that in just a sec. So how much would it be if we start with the 175? The 175 pay us 38, okay? The 172.5 pay us 25, which again, 25 plus 52, it's more than 70, which is 35 times 2. So we could certainly use the 172.5 as well. So, we certainly seem to have something in front of us that makes sense. But at the same time, we do need to work on fine tuning this to see what the best combination of option strikes will be. Okay. So anyway, let me make a few notes on the chart so everybody can follow. So what we said is that we're building an iron condor, which is going to be made of buying calls above. Okay, we're going to be selling the 190 call, okay, and buying calls above, which again probably is going to be the 192.5. Okay, and then below that, okay, and remember we are using Jan 3 expiration, knowing that earnings are on Jan 8. Okay, so, and by the way, earning dates may change, so we always need to make sure that we review so we are out before earnings are reported. Okay, and in the bottom side, we're going to start by selling the 175 put and buying below the 172.5. Okay, so that would be a valid way to approach it in this initial part of the planning process. Okay, cool. So let me move this here. Okay, here we go. Good. So now, so let's continue. So let's go ahead and input all those parameters in our analysis tab. So we'll start with the call side. We said 192.5, 190. And then we'll do the put side, which we said 172.5, 175. Okay. So if we were to do this condor would collect for us 38 cents. Okay. 38 cents. And the question is that a valid trade to be taken, yes or no? Because again, what is our goal? Well, our goal is to collect premium enough to survive the risk of the trade. And that is to have at least a premium equal or greater than 15% of the difference between strikes. So how much is that? Well, if I bring a calculator to this exercise, okay, if I bring a calculator to this exercise, and we look at the strikes, which, as we can see very clearly, it's $2.5 difference from 172.5 to 175 or 190 to 192.5. We got $2.5 strike price increments. So this times 15%, which is what I just said, that would be, we need at least 37.5 cents to call this trade valid, okay, from a risk point of view. And guess what? We will get paid at a midpoint 38 cents, which is, just a little above 37.5 cents. In other words, the trade looks valid from that angle, and that's a nice to see. But at the same time, I do want to give myself the opportunity to check a few more possibilities. Okay, I'm gonna analyze and duplicate the trade. I would like to double check other possibilities. So I'm gonna uncheck the upper iron condor, okay, the one using 172.5, 175, 190, 192.5, and I would like to create a variation. Remember earlier we said that maybe it would be fine on the put side to go for 172.5, 170 instead of 175, 172.5. Okay, now if I was to do that, what do I get? Well, I get 30 cents. Okay, and 30 cents is certainly lesser than 37.5. Therefore, that combination would not be valid, even though it could have been. It is not, and therefore the only way to execute this particular trade would be the way I am doing here, which is my first plan, which is 172.5, 175, 190, 192.5. Okay, so this trade looks valid, okay, since the market will open in 10 minutes from now, and also the next 10 minutes, okay, you guys know this, isn't it? The 10 minutes prior to market open, what we'll have is that we'll have a situation where the option chain resets, okay, and we'll have no data on the screen. So what we're gonna do is that we're gonna just stop it there, okay, we're gonna just leave it there. We're gonna go ahead and begin planning trades for directional purposes where we need to spend a little bit of time in front of the chart, And then when the market opens and all these options data starts updating, I'll want to come back here, recheck my 38 cents, make sure that's the case, and then and only then I will then be happy to place to place an order and execute this trade. Okay, so for now we went that far, which is looking good because it seems that when the market opens, we'll have a trade to be executed. Okay, so again, one last time, so you are ready for when the market opens, either with real capital or paper money. Okay, this of course is your decision. But what I want to do here is I want to make a little bit of space on the right side of my screen. One sec. Here we go. So I just want to make a little bit of space so you can see my writing properly. I'm not sure why it's not showing up properly. Okay, not sure why this is happening at the moment. But I'll put it here so you guys can read. Okay, so that way maybe you can input this particular options trade on your Option Station Pro. So when the market opens, you guys are ready to execute. Okay, of course, keep in mind first the risk of the trade. Okay, because the one thing I did not discuss here is how many contracts should you use for this trade. Well, keep in mind that the risk of this trade is going to be the distance between strikes, which is 2.5, minus the premium collected, that seems to be 38 cents. If that was the case, it would be times 100, it would be $212 of risk per contract. So if you want to execute this trade with a risk of, let's say, $400 or more, so then you would go for two contracts. If you want $212 of risk, then you would do one contract. If you want less, then this trade, you should not take this trade. Just that simple. Okay. Of course, also you may plan to execute this trade with real capital or paper money. All of those are your decisions as well. But in order for you to be able to execute whatever your decision has been, again, here are the strikes that you want to use: 192.5 call, 190 call. January 3 is the expiration, 175 put and 172.5 put. Okay, so hopefully you guys have made a note so you can work in parallel with me as I begin looking for directional opportunities. You can start inputting this in your Option Station Pro. So when the market opens, we'll be executing it together. Okay, cool. Little feedback out there, guys. How is it going? You've been quite silent since the beginning, which of course I understand. You are, focused on the session and just following what we're doing. So I totally get that. But at the same time, I would certainly welcome a little bit of feedback from you guys, even though it's just to say all good. Okay, so I would certainly still welcome that. So please go ahead and let me know it's all good, or if you have a question. So as I'm waiting for your messages, moving now to directional. Okay, so we're going to start looking at directional long and then directional short. Okay, we got more opportunities to the upside. Quick peek at the S&P. Okay, quick peek at the S&P. So the S&P is certainly, just moving, right? Incredible moves. Many people, of course, at this time of the year would attribute this to the famous, well-known, worldwide known phenomenon known as the Santa Claus rally, isn't it? Which statistically happens more often than not. So that's what it is. But, putting on the side what people talk about on TV, which is certainly sometimes a smart thing to be said. Not always, but sometimes it is. In this case, the most important part, now I'm getting serious, it's to be mechanical with your actions, in the sense that we are looking at it from a point of view of climate and on-field orders. And it is clear that when looking at auto climate here on the bottom part, we have 9 candles into a climate that is supposed to last 9. Today's going to be candle number 10, by the way. So, we are now getting to a point where this up move it's probably entering the territory of being exhausted. And again, it doesn't mean it has to be like that, because sometimes we have an extended climate, but again, that falls within the category of things that are less likely to happen instead of things that are more likely to happen. Okay, certainly if the market was to fall, there are so many green UFOs below that I would see probably the statistics repeating themselves, which is when it goes up 9 candles up, when it goes down 4-5 candles down only, meaning that probably in the long term we're going to see continuation in these movements, even though of course the beginning part of the year is critical because many large fund managers close trades to collect profits for tax purposes, etc., re-enter new capital at the beginning of the year, and again, many things could happen. So this is one of those times of the year where statistics mean, let's call it, more in one hand but much less in the other hand. Okay, so anyway, we'll just be mechanical. We actually don't care, isn't it? We just apply the process and that's it. Anyway, so looking at directional trades, okay, we're gonna start with stocks of a higher price point. Okay, so catching my attention here, Baidu. Okay, so loading Baidu here to see what we have. So Baidu is giving us a climate of 5 where the normal duration would have been 4. Okay, so certainly we can still look and see if we can plan a trade with Baidu, but given the current level of extension of its climate, we would need to plan on trade with half of the size. Also, concern in my mind here is that 45%, that's not good. Okay, so I'm gonna have to switch to pre and post market to see if we do have 50% and we don't. Okay, so really the way the large market players are trading Baidu is very simple. They place the orders because of whatever reasons they may have, but if they don't get filled, they just remove those orders, and therefore we cannot rely on them the way we could with other stocks. Okay, so Baidu, we are not going to use it for directional purposes. AVGO, okay, AVGO. So we got 2 candles into climates that should be 6.69, let's call it 7. So certainly that seems to be much more interesting, isn't it? So now we are talking, isn't it? We may have something where we can enter a market before it begins really expanding. Now probabilities are 45% with pre and post market. So I'm going to move to regular session to see if we can get a little bit better stats. Okay, and it actually becomes 42. So same story, both with Broadcom as well as Baidu. And again, this is a little bit of insights, okay, a little bit of looking behind the scenes of what those larger market players are doing. Okay, so we are done with the stocks of a higher price point. Okay, so now I got $20 here, $60 with Applied Materials. So let's go for Applied Materials. So Applied Materials got a climate of 5 out of 6. Okay, so today is going to be the candle number 6 actually. So still on time to enter this trade. So we're going to look at it. I'm just waiting for pending data for the stats to load. So we got 43%. If I change to pre and post market, it is 48%, so no good. Again, we are not going to force trade, so we move into BBY Best Buy, which is a very extended stock, 15 candles into the climate, where statistics would suggest 8, 7.73, we run it up to 8, should be the value. Okay, so certainly we're not going to go there. COP, let's see what we got. 10 candles out of 5.74, so that is 6 candles, and we got 5.70. We got 10. So in other words, very extended. So we're gonna pass on that one as well. CVNA, and by the way, this is to be expected. When the broad markets, and I remember we talked about this before as well. Not so long ago actually, where we started finding markets that were overextended, and when the S&P is in that mode, it means most stocks are in that mode too. Okay, so that is not something uncommon. Okay, so CVNA, we are dealing now with a climate of 2 candles out of 8. Okay, that is interesting. Unfortunately, we only see 33% for the stats, so we're gonna have to move to regular session, and that is giving us 48.55. Still not what we need. Okay, still not what we need. So we're gonna keep going, and now we are diving into Qualcomm. Okay, and I never say thank you for your feedback earlier, guys. So looking into Qualcomm, to see what we've got there, and Qualcomm is giving us a climate that has been evolving for 8 candles. Today will be candle 9, where that candle is supposed to last for 10, 9:45. We call it 10. Okay, so yeah, that one works. Okay, we are on time, and we do have probability of 50. That's good. I do need to check pre-post market just in case we got something better, and it's 56%, which is certainly better. Okay, so we're gonna use that particular setup or settings for us to plan the trade. Okay, so what do we have? Well, we have a climate of 8 candles out of 9:45, we would want to enter around the average price, which is currently 87.3. Okay, so we are looking for UFOs around 87.3, and unfortunately, around 87.3, which is where the little hand is, at this moment in time, we got nothing. Okay, we got nothing. If I was to switch to regular session, it's same thing. I got nothing at 87 something. Okay, this is an action. When you have the pre and post market and the regular session, you have both of those sessions giving you the probabilities you need. My favorite choice is to use the one with a higher number. Okay, but if you were to be lacking on opportunities, and I'm talking about portfolio management, and let's say you need a long, you just need to offset too much shorts in your account, and you need a long, then it would not be crazy to switch from regular session to pre-post market, or from pre-post market back to regular session, in order to see if the green UFO is lining up with the average, as long as the probabilities are 50% or greater. Okay, but in this case, I tried, but in both cases, it's not meeting our rules. Okay, so then we're not gonna do it. So I'm gonna just look at Trust Financials, okay, which is a $56 stock. Climate purposes, 5 out of 5. Today's going to be candle 6. So if we were to take this trade, it's going to be half of the size. The market just opened, by the way, so I'm just going to go back to STZ in just a minute. Okay, so we need to take this trade with half of the size. We got 57%. This UFO is located at 55.49. The average is 55.77. So it's almost lining up. It certainly would make sense to plan a trade on TFC. Okay, and I want to look at pre-post market. Pre-post market is giving us 42%. That is not good. But yes, the regular session of TFC with the 57% and that UFO with the top part being 55.49, that works, because it's not going to be lining up perfectly. But remember, stocks are fragile, so we don't need to be that precise. And certainly when that stock drops from 56.35 down to where that UFO is, then the average, it's a moving average, and moving means precisely that, it moves. So the average would move down and therefore be closer to that UFO, and therefore I'm going to say it's okay. Okay, but anyway, since we have a trade to be executed with STZ, I am going to go back to non-directional, look at STZ, reconfirm everything we said about STZ earlier, and if it's all good, we'll place an order. Okay, so what do we have with STZ right now? Well, good news, actually, we are getting 45 cents now if we do this trade. Okay, instead of the prior value, which was 38, now we get 45. Okay, so perfect. It seems that the market opened in a way where options are picking up some value, and therefore we are just gonna go ahead and execute this trade. Okay, so I'm just gonna right click. Okay, I'm having a little problem here. Actually, my place order button is not showing up. I'm not sure why. Interesting. Okay, so let me do this. I'm just gonna close Option Station Pro, and I will reopen Option Station Pro, because I believe there is a funny thing happening with my graphic settings, given the fact that I got multiple monitors and very different resolutions in them. So I think that the graphics got a little distorted. Let me see now. Well, I still don't have my... Okay, now I can find my trade option here. Normally I would have a button, it doesn't show, but it's okay. I still found the trade option. So I'll look at why is this later on. Okay, so I'm just gonna click on trade. Okay, I'm just gonna click on trade, and this allows me to place an order. To get into this iron condor trade, I'm gonna use the order. Okay, and this, certainly you can see the midpoint is 48. So I would recommend to go for the midpoint, because STZ is not the most liquid stock in the world, isn't it? It's actually not so liquid, and therefore I'm gonna go for the midpoint. My probability of being filled at the midpoint, it's let's call it low, unless there was to be a little bit of an increase in premium, and that's what I want to catch. If there is a little bit of an increase of premium, I want to catch that. Okay, and if I miss the trade, I'll be okay with that too, but I do want to collect as much premium as possible, given the fact that way my trade is of a higher quality, but also given the fact that that stock is not so liquid, I want to offset that problem a little bit by going for the midpoint which is 48. Okay, so I'm gonna place order. Okay, yes. And here I got everything in here. I'm gonna confirm it with a yes. And the moment I click yes, then if I look at my manage tab, here I got my Iron Condor order waiting to get filled, okay, which is a day order and is there. Okay, cool. So please get back to me when you can. If you are following the same process and you were able to execute, doesn't matter if it's paper money or real capital. Really, that's I mean, it does matter for sure. But in for this practice, this exercise, or for coaching purposes, if you wish, it doesn't matter to me. Okay, so just get back to me if you have executed this trade and you are filled. Please get back to me with how much premium you got, etc., etc. Okay. Good. Question here from Ruben. Have you seen the candle went above 204? Yeah, that was in the pre-market session. Yeah, and this looks to me, to be honest, a little bit of a bad tick. Or maybe not. We don't know, but we are just relying on the information we decided, isn't it? Which is we are using regular session, and regular session UFOs are giving us this probability, and that's good enough for us, so we just took it. Okay, so I get your point, Ruben, but what you don't want to do is to overthink, because now, if I was to follow up deeper into what you suggest, which makes a lot of sense, that's a very smart point for sure. But if I was to follow up and take it to the next level, now what about we look at other time frames? What about we do this? What about we do that? And next thing you know, you got millions of reasons to take the trade and millions of reasons to not to take the trade. So you want to find balance between having rules that increase odds in your favor, but at the same time also having rules that keep your process to be mechanical and simple. So trading becomes easy to implement, not too time consuming, and also then you go out there and have a happy life, instead of having to think about million different things about all your trades, and you have to spend the whole day, even if you're not in front of your computer, thinking about your trades. Okay, so you want to trade in a way that is effortless, and this has a lot to do with the rules you use. Okay, so again, I'm not saying to ignore market data, but we selected a regular session 55-minute time frame for us to plan the trade, and I'm just relying on that. That's what I'm doing. Okay, it's that simple. Cool. Okay, so we got the trade in. Okay, and then I'm gonna go back to directional, complete the trade with TFC. Very nice. Nice to see the teamwork. Nice, Mark. Nice, Ruben. Very good. So let's go ahead and work on the TFC trade. So we said, remember, this is a directional trade. Okay, so I'm gonna load TFC here. This is a directional trade. We have a climate, which is 5 candles out of 5. So today is still okay to enter this trade with the full size. If it was going to be the day after tomorrow or beyond, actually tomorrow or the day after tomorrow or beyond, then you would need to go ahead and use half of the size, because we would be trading in a climate which, being defined and confirmed, it's a climate that begins now being a little bit too stretched, and therefore we are falling now a little bit into the hopeful mode, which is not a crazy thing to be done, but certainly we want to mitigate that additional risk by reducing the size of the trade. Okay. Mark, doesn't TradeStation only allow market orders in SIM? If you want to make sure you get filled, yes. Okay, and if you're taking this trade in SIM, Mark, for practice purposes, just make sure you use market order. That way, you guarantee that you will get filled. Because if you use limit orders with a SIM account, depending on the sequence and how the orders enter the market, you may get filled or you may not get filled. Where in real market conditions, you would get filled. With a simulated account, you may not. Okay, so that's why I always said, if you plan, okay, to get filled, if you are practicing it and you want to get filled like 100%, so then use market orders. You will get worse prices, but at the same time, you can have practice, and that is, it's kind of like practice with weights. Because if you do a good job and you make some money and you are doing it with worse prices that you would get in the real world, so it's actually a good practice. Okay, so I always say that, but at the same time, to demonstrate how you should do it with real capital, I went ahead and I typed the amount, and I did change the duration of the order from good till cancel to day order. Okay, so Mark, good one, but hopefully now you understand also the reason why I did it the way I did. Okay, so let's continue. Okay, so we have a defined climate, we have the UFO. So the next step in our method would take us to identify the UFOs for the target. Okay, and if I scroll, and I look back in time all the way. So what do we notice if I switch to the monthly time frame? What do we notice? Well, we notice that this stock is actually making all times high. In other words, there are no sell-on field orders above, and therefore there is no way for us to set a target. So you have two choices, okay? And we've seen that before many times actually. You got two choices, which is to not to take the trade, and that's it, or to take the trade, but take it without a target. And therefore, what you're gonna do is move your target below green UFOs that may form in the future. Okay, so for example, let's say you have taken the trade somewhere at this point where the little hand is, okay, and the market moved your way and did something, and then against you a little bit, and then move your way, and now the market is moving your way and giving you green UFO, green UFO, green UFO. So now you would set an exit point at 55.14, okay, which is certainly higher than your entry point down here at around 53. Okay, and if the market was to go against you, you would be stopped out for a profit, not stopped out for a loss. Okay, so you will want to do that. Okay, and that's how we deal with markets that have no on-field orders overhead, and we cannot set targets the way we normally do. Okay, so yeah, that's what we're gonna do. So let's go for it. Okay, we cannot plan the target, and therefore we cannot plan for the expiration date. Let me rephrase that. That was not well said. We cannot plan for the target, therefore we cannot plan for the time to target, which we use to decide about the expiration date. So if we cannot do that, then the only way for us to pick the right expiration date is to look at earnings, okay, which are going to happen on. Oh, this is quite weird. I got no data for earnings in October, and it seems that the next ones are going to be January 30. Okay, so here's what I'm going to do, guys, and you may not like it. Actually, probably you will not like it, but this is what I do, and this is what I would suggest you guys to do. I don't have information to evaluate what's going on. Maybe it's an issue with Yahoo Finance. I don't know what it is, but the fact is that I don't have information to evaluate. I got October 17 earnings, but I got no data. Therefore, this makes me not to trust January 30 being the next earnings date. And it's funny because the name of the stock is Truist, but I don't trust Truist because I got no data. Okay, so what's gonna happen? I'm just gonna ignore it and just go for the next stock and find another trade because I'm not sure 100% on what I'm dealing with since I have lack of information. Okay, so that's it. Okay, I'm totally emotionally disconnected. I have no feelings of any sort when it comes to what's going on with that stock, and that's how you should trade. If everything is fine, you take the trade. If something is not fine, then that's it. Just go find another stock. There are many. Okay, and even if now we are getting to the end of the list, and you may say, okay, but that's the last one. Okay, you can always rerun the scan 1 hour from now, and you'll get new stocks. Okay, so no need to force trades. I mean, beyond no need, we just don't force trades. That would be non-professional. Okay. So what do we have with ZS? Okay, ZS is a stock giving us a climate which is one candle into the blue, likely going to last for 8 candles. So very, very nice, moment to buy that stock. If you're right on this trade, it's going to be a nice one. Average is 47.04. This is lining up nicely with this green UFO here, with the top being 47.05. Okay, lining up perfectly. Actually, price already went there and is moving up. Well, we may have another test of that bottom price of the day. Okay, so 56% certainly, that is nice to see. And what I'm going to do is look at pre-post market, which is 44, and that is not something that we will accept. Okay, so in this case, similar to the prior case, we're going to be using regular session data only. Okay, so 47.5 is the entry point. We are entering at the beginning of a climate. The UFO is indeed lining up with the average. We do have a trade set up, and therefore the next step is to check for a proper target. Okay, so I did turn on AutoUFOs, and this show us that the target for ZS should be located at the bottom part is 60.03. Wow, that's a monster trade. 60.03. Okay, 60.03. Current price is 47. We plan to buy at 47.05. This is a monster move. Okay, a monster move. And we've seen cases like that many times. And that in one hand is very exciting, and certainly I like to begin a trade like that. But it also means, which is a subtle meaning, but it's a very strong and important concept, which is that we are not likely to get there in one trade, because as we know, stocks are fragile. It's not likely the stock is going to go in a straight line up, and many things are going to happen in the market. It's going to take a while to get to that price point, and many things are going to be happening in the market, such as news, change of year, whatever. There is always something happening, isn't it? And stocks are fragile. They're impacted by the broad market, by the sectors, by stocks that are competitor companies, etc., etc. And who knows if we're going to get there or not. So even though the target is there in this case, we are just going to treat this opportunity like TFC, which is like we don't have a target. Even though we will set the target, the reality is that the outcome of the trade will be that we just trail stop, and exit the trade anywhere above whenever that is possible. Okay, and nice, it's dropping from 47.5 to 47.17. So hopefully we'll get an entry soon in that stock. Okay, good. So let's continue. Let's calculate the time to target, because in this case we do have a target, even though you'll see this calculation is going to be a little bit of a waste of time. We're going to end up buying a call here, you'll see. But let's try, let's do the process the way we should, which is target, we said, is going to be 60.03, entry 47.05. So we are talking about a 12.98 cent move. And you can see on the bottom left that my ATR is 2.1129. The daily ATR, right? So what does that mean? Well, it means that it would take 6.14 ATRs to get to the target, which times 7, that would be 43 days. Okay, so if everything is working according to plan, it's going to take 43 days to get to the target. Okay, so I'm loading the option chain. So we're going to pick an expiration date, which is at least 43 days. January 31st, 2020 certainly meets that rule perfectly. Amazing, right? But at the same time, that's not good enough. We also need to look at ZS in Yahoo Finance, so we find out more about the next earning dates. Okay, and the next earning date, it's going to happen. Interesting, it's not there. It's not there. Okay, so let me enter it again. ZS. Did I do ZS? Yes, I did it right. I did it right, and it doesn't seem that there is nothing on top of that. Okay, so the latest earning date, it's going to be the one that already happened in December 4, 2019. Okay, so yeah, so we cannot, just like before, we cannot plan this trade. And I as your coach, of course, this is unfortunate, because the setup is valid and certainly it looks like a trade to be taken. You can certainly go ahead and execute this trade with using stock shares. Okay, you can certainly go ahead and do that. But at the same time, we are not gonna force a trade or plan a trade where I am partially blind, in the sense that I cannot see the data I need to see, which is when is the next earning dates. Okay, so we just follow the rules. That's it. Yeah, Ruben, I hear you. And certainly, I can maybe work around this problem by looking at other sources of information. I would suggest, though, Ruben, not using Earnings Whispers. Nothing against that website. Please do not get me wrong. But I have seen a lot of different dates in that website compared to other websites, which through time have been proven to me as more reliable. So my suggestion would be that if you want to look at other sources of data, maybe you want to look into, let's say you're looking at Thinkorswim. Okay, so you can look at it into the Thinkorswim platform or Interactive Broker or other sources of data that could be more reliable. Okay, but again, I've seen unupdated data in that website. And Yahoo Finance, out of all the free resources that I've seen out there, and again, I'm not saying there are not more. Maybe there are better resources, okay? But based on what I know, Yahoo Finance is probably one of the most reliable nowadays. I used to like better briefing.com, but it's not available anymore in the same way it was. So therefore, I'm using the one that I would trust the most, okay? And yeah, so I'm just gonna rely on what I have, okay? And even though in this case it puts me in a position where the only thing you could do is take the trade with shares instead of using options, okay? Okay. Good. So anyway, so let's take a look at directional shorts, since we are doing directional, and then we'll go back to non-directional. So we got Boeing. So what's happening with Boeing? Boeing is falling, a very, very strong drop, 15 candles dropping when it should have been 5. So very, very extended market. So way too late to continue shorting. VMware. So what do we have here? We have 4 candles in the climate when it should be 5. So today would still be okay to short VMware. Okay. So I'm just gonna let it load. We had 53% with regular session. Pre-post market give us 47. That's not good. So if I go back to regular session, we got a problem because the average is pointing at 150.58, and 150.58, which is more or less here, is a price point where we got no UFO at all. The next UFO is located at 156, which is way higher. So VMware will not qualify. Okay. And the last one here in our list, Workday, similar to Boeing, very, very extended, 13 candles when the climate should have been 4. Okay. So yeah, no, it's not gonna work for us to the short side. Okay. So what are we doing? Going back to non-directional trades, looking for other opportunities additional to what we already found earlier. Okay. And I'm gonna have a sip if you're okay with that, guys. Cool. Thanks for that. So anyway, so we're gonna continue now. And again, earlier we looked at STZ. That was the one trade that we look for non-directional purposes. GLD was the next one with a higher price point. We said we're not going to do it because GLD is actually an ETF, and ETFs by definition, almost all the time, not always, but almost all the time, they carry less premium, okay, and therefore they are less advantageous. So I'm going to go for the next one, which in this case is going to be Merck, $89 per share. And while this is loading, I'm going to be looking at the earning dates for MRK, okay, which is going to be, I need to sort this properly. Okay, I would like to sort. Okay, come on, website, sort the data for us. Not sure why it's not sorting. Okay, well, anyway, in any case, we'll see it here below. It's February 5, okay? February 5, 2020 is the next earnings. I just wanted to sort it so the next one is above instead of below, but it's okay. February 5 is actually giving us a lot of flexibility to do things. The question is, do we have red UFOs above? Okay, so if I look at the monthly time frame of Merck, okay, that stock it's just started or is about to begin making all-time highs. So we may have UFOs above, okay, but for me to know that, I will need to load data starting in October 2000, okay, and that is a lot of data to be loaded. So let's do it because the trade may be worth it. Okay, so October 2000. But notice that the first thing I done is to disable auto UFOs. Okay, because I'm gonna load so much data, and with all the updates happening in the market, it would be too heavy for us to load. Okay, so what I'm gonna do is first going ahead, switching. I disabled auto UFOs, and now I'm gonna go ahead and load data from October 1st. Did I say 2010? Yes, I think so, right? Yeah, 2010. Let me double check that because right now I just got a little undecided there. No, 2000, not 2010. Okay, good. So it's a good one that I went back to check. So yeah, so instead of 2010, we are looking at 2000. So we need to load like 20 years of data. which is a lot. Okay, as you can see, TradeStation is taking its time because behind the scenes, you can see that here in the download scheduler. Okay, behind the scenes, a lot of data is being downloaded. Okay, so you can see the data range and everything is happening behind the scenes. And this, to be honest, does not even depend on how fast or slow your internet connection is, because TradeStation servers will be sending information at a maximum speed, which I'm not sure which one is that, but they do have limitations per customer on how much data they can send at any moment in time. Okay, so we just need to be patient here for this to be downloaded. And the moment this is completed, then I will add another 10 years of data until we get to 2000. In the meantime, of course, I want to be. Oh, we got it. Okay, good, perfect. So I'm just gonna go. I'm gonna go ahead now and add 1001 2000, which is another 10 years of data. Okay, and this should take a few minutes, and we'll have that pending data out of the screen. Okay. In the meantime, again, because this is taking time, so I am going ahead and looking at other stocks that could be possible candidates. So 50, 50, 50 CL, okay, Colgate Palmolive, maybe $68 per share. So what's going on with the earnings here for CL? So CL got earnings happening on January 23. Okay, so that's good too. Okay, that is also valid. So let's see, AutoUFO with CL, we got 54%. That is good. If we look at pre-post market, we got 49. That is valid too, but we normally like to use the one that provides more, isn't it? So 54% is beautiful. Yeah, so let me see if I move this up. Do we have green UFOs below? No. So it seems that I'm going to have to load more data as well to see if we got more UFOs below, because price is already inside these UFOs in it, so it doesn't count, and we need at least 2 UFOs above and 2 UFOs below. In any case, just to be efficient with time, so 70.96, that's 71. So if I look at the 71 calls with CL, because those are the ones I will be selling, isn't it? And I go for, we said earnings is January 23, so I go for January 17. Okay, so the 71 calls, that would be 72.5, they pay 32. Oh, you know what? So we may have a trade. So it will be worth it. It will be worth it to load more data here. Okay, so with CL, for me to get more data, I'm looking at monthly time frames here. For me to get more data, I may need to go all the way and load data using February 12 or something like that. Okay, yeah, February 12, something like that. So I'm just gonna go ahead here, 55 minutes of CL. Okay, and I will do the same, disable AutoUFOs and load data. First date is gonna be February 1st, 2012. Okay, and the moment we have that on the screen, we'll be able to look at it. Okay. But anyway, while this is loading as well, so again, we got 2 more bullets to shoot. Okay, we're gonna be looking at Merck, and we'll be looking at CL. So with Merck, I got all the data downloaded now. So what I'm gonna do is go back to October 1st, 2000. Okay, so I got all the data on the screen now, all the way to October 1st, 2000. I am about to turn on AutoUFOs. Okay, but again, we need to be careful, because if I do it while I'm still connected to the network, I may saturate TradeStation with so much computation to be done. Okay, so I just need to wait for CL to be fully downloaded, and then I will use a command, which is .onl, as you can see, and this allows me to disconnect TradeStation from the network, and therefore I'll be able to apply AutoUFO in a way where it's only processed once. That's it. CL is gone from a download scheduler, so I am now ready to go for ONL working. Sorry, I just got confused. OF, that's what I'm looking for, offline, not online. Sorry for that, guys. So working offline, Okay, so I just disconnected myself from the network. Okay, and now I'm gonna apply AutoUFOs. It's gonna take a while because it's still a lot of data, but that's it, it's done. Okay, and now I'll be able to see if I got something above. So if I go back to the beginning, so we are talking about, yeah, I am loading data from October 2000. Okay, we can see here on the left, October 2000. So the highest price point was that 91 something. And if I fast forward in time all the way to the current date, I'm just fast forwarding to the right side, notice that we got no red UFOs above. Okay, so even though we do have a little bit of price action above, there is no UFOs, and therefore a non-directional trade would not be valid with Merck. And therefore the next one, which is the last one we're going to check, is Colgate Palmolive, which for this one we have data loaded starting in February 2012. As you can see, you see that February 2012. And if I move all the way to the right side, we do find UFOs below price. Okay, so the question is, I need at least 2 UFOs, isn't it? So that would be one. Okay, and the next one would be this one here, and here I got one, which is the red one, and the next one will be this one. Okay, so the type of range I could trade is this. And by the way, I do like the setup very much, even though I haven't done the probabilistic calculations yet, which I'm going to do immediately. But if I look at the vertical distance from current price to the upper line and the vertical distance from the current price to the bottom line, I am exactly in the middle, which is nice. Okay, so okay, so let's go ahead and go back to my normal amount of bars. So TradeStation does not get saturated when I turn on the live data. Okay, so I am back to this. Okay, and now I'm going to use my command. Now, yes, I'm going to use ONL for online, and then I'll pick working online. It's going to ask me for a password again. So I'm just going to type it. And the moment I type it, everything will go back to normal inside TradeStation. Okay, so let's see if we do have a trade or not. I'm going to pick Option Station Pro. Here we go. Colgate Palmolive. Okay, I'm going to start with, well, I know I'm going to be selling the 71s. So I'm going to go for the expiration date, which is the shortest that pays me enough for the 71. That one pays me 12. Okay, that's not enough. Okay, so if I do January 3, the 71 pays me 26. So this may be enough. May be enough. So analyze and sell Aaron Condor. And we're going to do the whole thing again, like we did before. So plus 1 standard deviation, minus 1 standard deviation. Okay, so we are given 70.6, 65.42. So keeping 70.6 in mind, certainly 70.6 is below 70.97. So that's a valid location for the line. And 65.45, it's somewhere here. Okay, and certainly 63.49. It's also much lower. And by the way, I'm noticing I made a little mistake earlier, which is that I thought the current price was here, okay, but the current price is actually here. Okay, so we are slightly closer to the upper range instead of the bottom range. Okay, but it's fine, it's all okay. So good. So let's continue. If I sell the 63.5, how much I get paid? 63.5 pays me 9, so that's not good enough. Okay, so therefore January 3 is not good. I need to go for January 10. Looking at the 71, I get paid 45. This is good. And looking at the 63.5, I get paid 31. That is also good. But now my concern, and I'm sure you were thinking about it too, is this January 10? Yes. So with January 10, probably I'm gonna surpass that 70.6 may gets us in trouble. Okay. So January 10, it's moving that price point to be 71.23. Okay, and 71.23 is above my purple line. Okay, so the question is there anything above? Any red UFO above? Okay, and they are, but they are so far out that I'm just gonna get paid nothing. Okay, so if I had another UFO somewhere close here, then yes, I could play with this, but in this case, the setup will just not work. So the only way to make this to work is just to wait for CL to fall back. And if CL was to fall back, it would increase the amount of premium to be collected from the put side, and then you may have a setup that works. But at this moment in time, having the current price of CL trading at 68, the call side looks okay, but the put side is not looking good. Therefore, this trade will not be validated. This trade does not work. Okay, cool. Everyone is 4:05 in Spain. I guess it's going to be 10:05 in New York. So I believe that it's time to conclude the session. We surpassed the ending time by 5 minutes. Yes, Mark, of course. That's the beauty of the scans, right? Yeah. Hi, Maria. Good to have you in the session with us today. So the calibration settings that I use all the time, let me show you first, and then I want to add a little more. It's 0.618. Okay, I use the golden ratio for the calibration, 0.618. Okay, but I would like to suggest, Maria, that you go ahead, okay, and you get into our YouTube channel, which is youtube.com/c/tradewithufos. Probably you are watching us via YouTube right now, isn't it? Well, not probably, certainly, right? So you can get into the playlists, and when you look at the get together playlist and there is the sharpening one, you can click view full playlist. Okay, and the moment you do that, you will see, if you look for it, that we do have a session that we did on calibration. Okay, let me make this larger so we can see. Here we go. On May 11, we did a session on calibration. So I would strongly recommend you to watch that. It's a 2-hour plus video, so make sure you take your time, because the information is very relevant for you to use the app at its best. Okay, so make sure you don't miss that one. Cool. Okay, everyone. So I'm just gonna say goodbye. Also, I want to say, take a look at your calendar, because when you look at the get together calendar, given the fact that we are, in a very special time of the year, isn't it, with Christmas and everything. What I'm trying to say is that there may be changes in some of the schedules that we already have. So when you get into the get together page, where you can see our current calendar, make sure you take a look at this at least during this time of the year, let's say once a week at least, in case any of those dates changes. Okay, keep that in mind. It's an important one, guys, because we will very likely have some changes given the time of the year. Okay, so, and talking about the time of the year, I also want to take advantage to wish you super happy holidays, everyone. A beautiful and Merry Christmas. And also, if you happen to take some days off and I'm not going to see you until 2020, I'll also wish you a Happy New Year, and so on. I'm counting that you will join me at least on the 29th. We have a very important session that we will do when we do sharpening, isn't it? That we are putting the plan in place for 2020. So I'm counting on you to join me on that one. But again, I would certainly understand it's family time and maybe you are away. So if that's the case, Happy New Year as well, and see you next one. Okay, everybody, you guys take care. Keep safe out there. Remember, a few of the following days will be low liquidity days, so careful with spreads depending on the markets that you trade, etc., and make sure you follow rules and the trades you execute make sense. Don't do it just for the sake of practice. I mean, if you were to do that, just do it in a paper money account. Okay, everyone, you guys take care. See you soon. Bye bye.